Hello, everybody. Welcome to the Energy Newsbeat podcast. My name's Stu Turley, President and CEO of the Sandstone Group. Today is a fabulous day. I've got two of my favorite guests out here right now. I've got Tracy Shuchart. I hope I said that right. And we've got a great show with her. Tracy, welcome to the podcast. And I loved your Charles Payne interview this week. That was out of the park.
All right. Thank you. And thank you for having me on.
I'll tell you, I'm over here being a big cheerleader. I know her. I'm going to get to interview her. When I don't think he heard me because I was yelling at the TV, but great job on that interview.
Thank you.
And we also have Josh Young. I mean, not just a Josh Young. We have the Josh Young over at Bison Interest. And I love your Substack there, Josh. What do you got going on?
Yeah, so I'm dressed a little less formally, and it's great to be on here with Tracy. Tracy and I actually both got to go to Vienna in February, and I don't think we knew it at the time, but that became more and more important for oil markets basically every day since then. So it's great to be on here with Tracy, and Stu, thanks for having me back.
I'll tell you what, Josh, on our last podcast, after you shared it out, let me go do the same thing and just take a brief moment here. We went nuts, and then it actually went even more nuts. And I want everybody to go out and also get ready to ask questions, because, you know, when we're sitting here and we're looking at the markets, it's great to have resources. And Tracy, I loved your interview with Charles. You had some really good points. As a day trader, I kind of like having good information. And he asked some really, really great questions. Your website is Hilltower Resources Advisors. I've got it here and it'll be in the show notes. But tell us what you were thinking on the interview with Charles.
Well, that was kind of a passionate interview. I guess you can hear what I had to say, I guess. We were talking about, the lack of energy that we have right now to power all these data centers.
I'll tell you what, Josh and Tracy, I'm going to throw this out there. Do you think that we have got an oversubscription of people getting excited? If they invest in nuclear, you're 10 years away from having some decent returns. I'm kind of looking at my future dusting off my old MBA book and looking at future value of money and formula. And then you sit back and go, are we oversubscribed on natural gas? Are we oversubscribed on nuclear? What are your thoughts on AI and investing?
Which one of us are you talking? Are you talking to me?
Whichever one.
Go ahead, Tracy. I want to hear your perspective, and then I'll share mine.
Well, I think that we have all this focus on AI. There are billions and billions of dollars being poured into this industry. Well, promises anyway. Can they deliver on that? We'll see. We have, companies issuing corporate bonds to fund all this. Literally, Meta is spending money like crazy people, not taking in, eventually I think investors will kind of wake up and say, okay, we kind of expect some ROI on all of your CapEx spending. But that said, while everybody's been focused on, we need these data centers, we need to build out these data centers, we're just going to talk about this, we're going to say we're going to do it. But the fundamental problem is that we have a lack of energy resources for this and lack of energy infrastructure. That means we need more gas plants, we need more pipelines, we need more midstream, we need more midstream for nuclear, we need faster permitting. We have a lot of neglection in this particular area because you can build all the data centers you want, but you don't have power for them. They're useless, right? So I think there's been far too much focus on building these data centers and not enough on how are we going to power these.
Bloomberg had an article. You bring up 19,000 really great points, Tracy. And Bloomberg put out an article about 3 weeks ago. And the electricity prices, and I believe the Democrats are going to use this against the Republicans very shortly. And that is back east, there's been a 230% increase in power in many areas based off of the increased government data centers going in, and the additional lines that are required are being billed to the consumers. And even in Tulsa, Oklahoma, and the Bloomberg article also said that if you are 70 miles from a new data center, your bills are going to go up. Even in Oklahoma, Tulsa, Oklahoma, with lots of natural gas, their prices went up 100%. And we just had Chevron just announce this week that they're putting in 2 huge new gas turbines in a data center. And Chevron is now doing what Liberty Energy is doing, and that is they're moving into the data center generation spot. Josh, you got some great thoughts there.
Sure. Yeah. Tracy, you might want to put your thing on mute. I think there might be some background noise. And then just one other, since we're live, it makes sense, I think, to share, if you're open to it, that I think people can see either on YouTube or on Twitter or both. If you want to share on YouTube, or sorry, on Twitter, that you're doing this, that way people can see it live. I think people really enjoy getting to engage on this stuff. And then also, I'm not with Hill Tower. Tracy's with Hill Tower. Apparently, there's a Bison Insights and a Hill Tower above my head, at least on my screen. Right. Which is fine. Everyone should check out Tracy's stuff. I really enjoyed following Tracy on Twitter over the years, and she shares really interesting information. So,
and Josh, I will be flipping on the bottom. Follow Josh Young on X with your logo sliding across the thing on the bottom, and Tracy's. I'll have that information sliding on the bottom as well too.
Yeah, so a few things. So I mean, I completely agree with what Tracy was saying. I think there's sort of this undersupply of power generation right now. I think there's sort of this weird dynamic with these AI data centers where the valuations of the companies that are building them out, the pure plays in the public market, as well as some of the AI companies in the private markets, are valued at really extreme levels. But at the same time, there's trillions of dollars pouring into the actual purchase of the chips, purchase of the land, development of the data centers, and then development of the power generation that's necessary to go into it. And so I think it's possible to be both skeptical, I think reasonably skeptical about the long run returns on investment at 10,000 times revenue or whatever some of these, pure AI companies are at, and then, the 10 or 50 or whatever times revenue that some of the data center pure plays are trading at. On forward, like 28 or whatever, some of these have huge valuations and no huge market caps and no revenue or almost no revenue. And at the same time, be extremely bullish on the energy that's necessary to go into it. And, also acknowledging some of these bottlenecks causing some weird market distortions. Like you're saying, Tulsa, Oklahoma should have very low power costs. Oklahoma is basically dirt floating on top of a giant pool of natural gas with some oil and condensates. But really, like, the way to think about Oklahoma is just, they're truly blessed with an abundance of natural gas. And so very weird for them to have high power prices, and very weird for there to be this sort of competition in terms of residential power and even, commercial power. A store selling, your milk or whatever should not be seeing radically higher power prices because someone's going and building a gigawatt data center down the street. Like, that's clearly a policy failure. The one area where I think I might have a slightly differentiated view on this versus the consensus is I'm a little concerned and skeptical of the nuclear boom right now. So the SMRs mostly don't work yet, and a number of the highly touted companies at high valuations, either in the public market or some of the companies that have been getting funded on the private side, they don't seem to actually work. I haven't seen sort of functioning ones yet, and the ones that, as I look into it, the more I look into it, the less comfortable I get with these companies and sort of their promises. And then just very high level, and I've gotten a lot of pushback for saying this, but I'll say it anyway because I think it's a reasonable perspective, and I'd love data to the contrary. build quality on almost everything post-COVID seems worse than pre-COVID. This isn't one of those things where, hey, back in my day, whatever, but there's a noticeable difference, whether it's t-shirts, which we had to make a giant effort to get these shirts made that like aren't terrible, to groceries, to food at restaurants. Service levels are down, build quality's down, costs are up. And I worry about the implications of that on the most critical and complicated things that we make, like nuclear power plants, especially in the US, where we haven't built any in decades. And so I really worry about the left tail risk. And it's not that I think nuclear is necessarily dangerous. I just think we've sort of messed up, and I really worry about some of the left tail risk because of this degradation in quality. And I think we have great engineers in America and in the world. We have great physicists, great talent, but I just worry that I would rather see us fix our quality control problem as a society before we go and build a bunch of things that could have the ultimate sort of left tail consequences on sort of design and build and maintenance failures.
My head just exploded because I got about 9,000 questions. And Tracy, what are you thinking about what Josh just kind of threw out there? And that is, we've got a manufacturing quality control issue that relies on energy.
Yeah, I mean, I absolutely agree with that. And to his point, I want to stress that I absolutely agree about SMRs. I know everybody thinks that this is great, and I think the idea of it is great, except for it's not really commercially viable. And we actually saw this happen with NuScale's project in Idaho, right? It ended up costing much more. It was way over budget. It wasn't commercially viable. And so we've already kind of put that to the test. And so I don't think that technology, although I think it's great in an ideal form, we should not expect this to be commercially viable anytime soon. And the kind of the nuclear experts that I have talked to about this, agree and say, what is best right now is what is tried and true and what we have done for 75 years. And that's large scale reactors, because they're cost effective and we know how to do it.
Do you guys think that coal? I've been doing a lot of digging on coal, so to speak. That was a good pun, even for an Okie. And that is, I think clean coal can be very clean, getting rid of the particulate matter, since that is absolutely going to save our grid. Secretary Chris Wright put out there and said we were approaching I believe it was an 800 or some huge increase in blackouts because of the number of coal plants that were being closed down. But if you look at updating the coal fleet, it is absolutely critical when you take a look at clean coal. And let's see, no power, clean coal. I'm kind of like leaning on, let's have some clean coal. Thoughts?
I'll jump on that first. So one, there's rapid conversion of coal power plants to natural gas. And so mostly it's been on the ones that have been retired but haven't been dismantled yet. And so this is really exciting. It's a big trend for the engineering and construction companies. They've announced it. Some of their shares have gone up a lot on the back of it. Some of the oil field services companies are getting into the sort of power gen with natural gas. And so there's a little bit of this sort of trade-off where some of the move away from coal has been towards increased gas consumption, but certainly you're seeing, it looks like all-time high consumption for coal this year, and then probably even more consumption for coal next year. There was this really funny report I saw that I pushed back on pretty hard on X, I think it was yesterday, where they claimed that Chinese solar was up and Chinese coal consumption was down. And they pointed to certain waterborne imports, ignoring that, imports from outer Mongolia, right? Mongolia, the country, were up a lot. And then, what you can tell, because China really tries to control their data and message using their state data, for their sort of national sort of purposes and propaganda, rather than as like a reasonable source of reliable information, which maybe is like other government data here and elsewhere, but China is known for that. And so you can see from second and third hand sources that Inner Mongolia sort of exports of coal, again, it's part of China, but they're shipping it from there to some of their bigger industrial centers. That activity has boomed, contrary to this, I think it was Bloomberg or something report. And so it does appear that both in China, from what I can tell, and I would need to see actually a lot of confirmation, not just sort of official statistics from the Chinese government, which is a communist party-controlled country. I would need to see a lot of data to sort of disprove that. But coal consumption is rising a lot. I think it makes a lot of sense. And yeah, if we can get rid of some of these particulate emissions from coal burning, I'm all in favor of burning additional clean coal to help provide some additional power demand. What do you think, Tracy?
Yeah, I mean, absolutely. And I think this administration has made a point that they were going to invest in all types of energy. That was coal, natural gas, and nuclear being the top three, obviously. And so I think it's great. And I think what's really interesting, what you can do with the coal ash is that you can recycle it and you can get critical minerals out of it. And so there's a dual purpose, right?
Right. I'll tell you, let me also ask this, because if we see coal, I don't think coal will be as much as we ever saw in the past. I think we can bring it back. And that Chris Hedge on LinkedIn wrote a very good article this morning. And I want to ask, he put out here, I didn't verify these prices with a crayon. Since we barely have any runways in Oklahoma, my crayons are almost broken sometimes doing research. He put on here why natural gas still sets the price. Besides the growth of renewables, natural gas remains the dominant fuel for U.S. power, accounting for roughly 40%. He put on here that $2.20 for MMBTU in 2024 will go to $4.90 MMBTU by 2026. And when you take a look at the doubling of LNG exports plus the new natural gas pipe power stations coming online, I think this really could impact other items as we go through this, and say this could be a big deal, don't you think? Do you think it'll get to that $4.26 in natural gas pricing?
So was that 426 or was that I thought it was 490.
Yeah, let me go look at it again here real quick. 490, excuse me. Yes.
So the spot price yesterday was it 460 something? Okay. Now it's down a little to 446. So to me, that seems pretty reasonable. That's only a 10% move or something up, and the forward curve looked roughly in line. Down a little in the shoulder season, then up again summer and winter next year. So to me, it seems reasonable. We do have a lot of gas here in the U.S., but the gas that's getting tapped now for incremental supply, as well as to replace production that naturally depletes rapidly every year, is incrementally higher and higher cost. And so we've had efficiency gains, but those efficiency gains have diminished recently over the last few years on the natural gas side, as well as on the oil side. And so it's forcing the cost curve up. As you have more demand and get forced up the cost curve for that supply, you should see a higher price. And so that actually seems, I'd say probably somewhere between 450 and 550 seems like a reasonable sort of range to expect under normal circumstances, looking out the next few years. And I'm real interested in Tracy's perspective. What do you think on natural gas from here?
Yeah, I mean, absolutely. I mean, we're practically already there at that price range. But I really wanted to mention that, even if it at say $5, we'll call it $5, even that is relatively inexpensive compared to other countries. That to me, and in comparison to other countries, this is remarkably inexpensive, and it's certainly remarkably inexpensive to other sources of energy within the country to help electrify everything. And so I think, to me, I don't think that price is going to be prohibitive in any manner whatsoever.
Do you think the pipelines back east are a real problem because they do not want any of them? And we also are going to have a huge AI. There's a waiting list for 5 years for some of those big natural gas turbines. So I think we may be at a limitation of how much we can grow natural gas demand. Don't you guys think? I mean, it might be limited. Boy, that's a new word. Limiting by the pipelines as well as the. But we're also seeing, Tracy and Josh, the flatlining of natural gas rig counts is flat. I mean, it is very good and solid, and the rig count for oil has been decreasing.
Yeah, I mean, as far as natural gas, I actually gave a presentation on this last year talking about we need midstream investment. We need pipelines, we need storage, we need investment in all of these sectors. And there's a lot of opportunity there. You can get, we've proven you can get a pipeline up really rather quickly compared to, say, building a nuclear facility or something of that nature, and gas turbines. I mean, we've done it extremely quickly. And, there's several examples in Texas where it took really under a year, which is amazing. So, I think there are a lot of investment opportunities in midstream because this is where we also need to be able to distribute natural gas throughout the country and to get them to the data centers that they need to get to.
One point on that, I think one really exciting thing about the trajectory of development for data centers has been how many are going into areas that have a lot of natural gas supply and that were actually that were almost oversupplied at the local level for natural gas. And so when you look at the data centers getting built in Northern Virginia and going into West Virginia, Ohio, and Pennsylvania, and then you look at the development that's starting to happen at a really rapidly accelerating pace in West Texas, I think there's a real potential, and a little bit in North Texas too, there's a real potential to actually debottleneck. And on one hand, you're seeing more pipeline developments, which are great. And like Tracy said, they should be really cheap. Some of them get built cheap. Some of the interstate ones, or if you're in Canada or somewhere else, they get real expensive and they take magically the same thing. It takes 3 months in China and a year in Texas, takes 10 years in Canada, or, forever if you're trying to get it from Pennsylvania up to where they need it in Massachusetts and New Hampshire. So the debottlenecking and just going directly to the areas where you have this abundance of gas is really exciting. There's lots of different industry dynamics and lots of different beneficiaries from that debottlenecking and from going right to essentially the source or near the source for the consumption. But I don't know. I think there's this risk a little that you end up with, let's say, too much, at least from a short-term perspective, development in, let's say, West Texas or in Pennsylvania, and you could go from Levy Hub or Waha or whatever, the local price areas and local hubs, going from being way oversupplied to at least temporarily way undersupplied. You could see very interesting price dynamics, the sort that, the John Arnolds of the world 2 decades ago traded and became billionaires out of. So there's real big potential price moves. It shouldn't affect demand too much, but it could dramatically affect local prices, profitability of producers, services activity, construction activity. There's lots of different implications. And also the short-term to medium-term demand for some of the pipelines and other infrastructure that are getting built.
Oh, outstanding point. Let me show this. This is the Chevron rolls into West Texas for first data center project. This is on energynewsbeat.co, and I wrote about this the other day. And when you take a look at stranded gas and no pipelines in that area, they 0 they're at negative dollars in the Panhandle sometimes. I mean, in the Texas Panhandle sometimes. But I've got a really good question here from Rodney for you guys. Great questions for your guests, Stu. Once pipelines had in the easements for existing pipelines, shouldn't twinning be relatively easy to increase capacity? Pretty good question, Rodney.
Doesn't it depend on who the president is and who the governor is and whether it's interstate or not? I mean, again, like the craziest part to me about some of these Canadian pipelines taking 10 years is that they were actually mostly twinned pipelines. So this whole thing on, the TMX expansion, I mean, it was an expansion. It wasn't even the first one. So it was just so unbelievable. It ended up costing like 30 billion or 25, like some astronomical insane number because of all the regulations, whatever stuff. But yeah, in theory, it should be really easy. And it's one of those things where you look at it and then you see China. And again, China has many, many problems, many issues. I'm not in favor of a command and control economy or totalitarianism or anything like that, but they build it in 3 months. And so, I think that sort of tells you, hey, if you got all your political stuff figured out, you got your regulatory stuff figured out, infrastructure is easy and simple to actually build. We just make it way overly complicated, as some of these countries are showing us in terms of their build times.
You bet. And Tracy, what were you thinking about that?
So absolutely. I mean, I agree with what Josh says. I mean, this really depends on how streamlined you get, how quickly you can get permitting done, how many lawsuits can you avoid from environmental groups. So it does depend on, state, local, and federal governments.
Tracy, you brought up a fantastic point, and that is we are so blessed in the U.S. to have such great resources. And this morning, you take a look at the geopolitical stuff going on around the world. It is pretty pathetic when you think that Ukraine just hit some drones into the Black Sea area. And it is really kind of caused a big export. They hit an export facility there. And so it really is kind of sad that we have got geopolitical issues to deal with when 10 years ago it used to be supply and demand. And now it's supply, demand, and whether or not it's got some serious problems with whether or not the Houthis are going to be blowing up things. And there's a Iranian ship that just took a tanker in the Strait of Hormuz. We've got some serious still things affecting prices geopolitically around the world.
Yeah, absolutely. And I think you've always had that. Look at the 1970s with the Iran crisis. I mean, I think that has been an issue for a very long time. I think what people are more surprised about is that the oil markets are generally brushing all of the geopolitical risk off at this point. I mean, if you see, we're, just right around $59, $60, we have, prices haven't really reacted to any kind of geopolitical risk at this point. I think that has a lot to do with sentiment and the media constantly telling us that there's a huge oil glut and that we're going to have a giant global recession. And so, I think we've seen for the most part of this year, just really poor sentiment in the oil sector, in the natural gas sector.
You bring up another fantastic point, Tracy. I'm going to give you the old golf clap here. The glut and smoke on the water, oil on the water. You sit back and kind of look at this glut. Where's the glut? Is almost like that old cartoon, or that old ad that they had, where's my beef? Where's the glut? Because I'm seeing a good, strong demand. Oil glut is kind of nowhere. I think we have more dysfunction in California from Governor Newsom than we should worry about glut on the water. I don't know about that.
Your thoughts on that, Josh?
Yeah, I mean, okay, so there is more oil on the water than there's been in a while. So that's clearly true, right? And again, this might sound weird for me to say,
but the flip side is the demand to the refineries is pulling it off, and it's just being transported around a bunch. I looked at a couple slides that I have. I'm working on an article, and you are spot on. There is a lot there, but the demand is pulling it off the water almost as fast. I've never seen that before either.
Yeah, the demand, the non-OECD demand and then US demand are both surprising to the upside. I posted on social media, and sometimes I'll sort of troll a little bit on there just to get, it's really helpful to get people's sentiment. Yeah, so I mean, IEA, these numbers are just nonsensical. That's just dumb, and that's not me trolling them. They're just wrong. They've been wrong for a very long time. They hide it, and then they do these kitchen sink every 10 years. They're just like, oh yeah, whoops, there's a billion barrels that were supposedly in reserves that are are in storage that's gone, right? The missing barrels, like Mike Rothman had talked about, and various other folks. I mean, just gone. So that's just nonsense. But I posted this thing about how refining margins, I think they got up to $31 a barrel, the 3-2-1 crack spread, just very high level. Individual refineries, just like individual price points for oil or gas or whatever, will have different profit levels and so on, but it's very crude, just like 3 barrels of oil turns into 2 barrels of gasoline and 1 barrel of diesel, as just a very high level simplistic proxy for refining profits, which gives you an idea of how much oil the refiners want versus what their capacity is, which tends to be a decent signal of demand, and really also market balances. So I posted this saying, hey, you see this and you're bearish oil, because everyone's bearish, right? You look on TV and just every person, every market commenter, every pundit, virtually, I mean, I don't know, Tracy may be the exception there, but every single person coming on is so bearish, and there's a glut. And at the same time, you have those margins that are just so robust. They tell you that there's something, Stu, like you're saying, different going on. And you can see in the numbers, right? When you look closely, non-OECD demand is off the charts, and then US demand is up. And everyone's minds blow up when they see this, because they think, hey, because Trump messed around with stuff with tariffs because of Liberation Day, demand should have collapsed. And it's just not, it just hasn't happened. And maybe it'll happen in the future. I'm going to channel my Jeff Curry from 10 years ago, when he was very, very bullish on oil, where he says, look, it's not, he used to say, look, don't look forward in the oil market, look at today, because the price, it used to not price the future, now it does, but oil for the longest time priced what today's market was. And in today's market, at $31 3-2-1 crack spreads, or wherever they are now, I don't know if it's 30, I think they're up a little today, that tells you that we're undersupplied for products. And if you're undersupplied for products in the middle of November, before Thanksgiving travel, with all this craziness from the FAA down and whatever, I mean, man, how much more bullish can you get, especially at $60 WTI? Tracy, what do you think about all that?
Yeah, absolutely. I absolutely agree with that. I was going to say, we're seeing draws across the board for products. So obviously the demand is there. So, those products don't come out of the ground that way. You need crude oil to make them. And so there is obviously demand there. And then looking at future demand, we keep seeing this growing. Why? Because we're building out data centers, right? Everybody's building out data centers. What does that take? Well, transportation. What does that take? A lot of diesel. You need a lot of diesel to build these facilities, right? And we're talking about more critical minerals, more drilling for those, in North America and elsewhere, to try to pull those supply chain away from China. Well, what does mining use a lot of? Diesel, right? And so there is a lot of demand coming online from just mining and building an infrastructure alone.
The other thing I found interesting is we've mentioned tariffs, and we've mentioned, we didn't get into sanctions, but sanctions on Russia seem to have started kicking in, and the sanctions from the drones are starting to kick in. but the refineries sanctions never work, and it seems like they're finally working in this case, with India now having to really work on getting their dark fleet stuff going on. I'm noticing that diesel prices going back to, the Russia oil goes from Russia to India, gets refined, and then goes back to the EU. You can't buy this kind of silliness in a market. But it seems kind of wild that diesel prices, which they use more diesel than gasoline in Europe, is now going up because of Trump sanctions. I don't even know how to begin to price that bad, Doug. Your thoughts, either one?
Well, I'll bring up something. I think what's kind of overlooked right now is going to be November 21st, those sanctions on Lukoil and the multinational, international companies that are linked up to, because we're already starting to see cracks there. You have to remember, they have international relations and projects in many countries, right? And so we've already heard about, that's been in the news media lately, is Iraq's largest field, for example, is experiencing disruptions because nobody knows what to do. And they, Lukoil tried to sell part of that. They couldn't. The deal collapsed with Gunvor. It's more than just Iraq. It's Romania, Netherlands, Finland, Switzerland, Moldova, Italy, Balkans, U.S. even. They own gas stations in 200 filling stations in New York and New Jersey and Pennsylvania. Wow. I was writing about this. Kazakhstan, Azerbaijan, Egypt, Cameroon, Nigeria, Ghana, Congo, UAE. Mexico, Peru. They are located everywhere. And there are going to be a lot of problems when these sanctions come into effect. We don't know what kind of supply disruptions are going to happen. And I think people are really overlooking that. And so, keep it on your radar.
Do you think, Tracy, outstanding points, Tracy. Do you think that there are going to be companies that take advantage of it, like in Iraq? With Lukoil having to shut down their production there, I noticed that we are seeing a couple other folks, BP and other folks, gearing up to jump in there.
Sure, they're going to be winners and losers, but the problem is that it's so much all at once. I don't expect this transition to go that smoothly, right? It's not going to happen overnight. That somebody's going to swoop in and buy all of their assets internationally. Right. And so, because they are widespread, and everything from upstream, midstream, downstream. So, again, I think there's going to be a lot of supply disruption that people are just not prepared for right now.
Josh, what do you got there?
Yeah, I think I remain pretty skeptical of sanctions enforcement, unfortunately. I think we've seen many promises over the last few years, and sort of similar, unfortunately, with these tariffs. The real problem with sanctions, in my opinion, isn't with sanctions, it's with announcing them and then not enforcing them, because what it does is it rewards the people who ignore them, and it punishes the people who respond in line with the announcement. And so over the last several years, if you believe the Biden administration on sanctions on Russia, on price caps, on whatever, it was all bogus. If you believed the sanctions on Iran, it was all bogus. So if you were like, XYZ trading firm and you chose to not trade with whomever that was sanctioned, you lost money. And if you were ABC trading firm that did it, you gained money, and there were no consequences. Similar with tariffs, where you announce them and then roll them back. If you build a factory in the US, you'll get destroyed by the Trump policy where they do it and then don't do it and whatever. If you just ignore it and keep buying stuff in China, they've waived it and undone it over and over and over again. So again, I think like the big problem with the sanctions is that they just haven't been enforced. The one kind of sanctions, which again, I posted about, at first I was sort of joking about it because people are calling them kinetic sanctions. It's basically like Ukraine bombing Russian oil facilities. But like, these are the ones that get enforced because the sanction itself is the enforcement of it. And it's taken a little while for Ukraine to figure out they need to actually hit the export facilities for oil rather than the refineries creating refined products to really have an impact on Russian income. It does appear that they've gotten that message. And in the last month, the attacks, which have been ramping up over the last, let's say, 3 months, have been more and more oriented towards crude oil export, transportation, and export, rather than just the refiners. They're still hitting refiners, but they're now hitting more and more, to the point where it looked like there was an announcement that a 2.2 million barrel a day crude oil export facility, one of the major ports exporting Russian oil, has been temporarily halted. And Stu, I think you mentioned that at the start of this. So that's a big impact. That's a sanction that's enforced by the nature of it and is very different from the sort of discrediting, weird bipolar announcements without enforcement that have been unfortunately bipartisan in the US, bipartisan in Europe and various other places. And, and just my last point on that is I do think there's a humanitarian aspect to this that's worth noting, which is that we're sending weapons to Ukraine and we're buying Russian oil, or at least not enforcing sanctions on Russian oil. And there is, I think when most of the time, I think it makes sense to just say, hey, there's humanitarian concerns, there's economic concerns, let's focus on the economics. But when there's this degree of egregious disconnect between the economics and the humanitarian aspect, often those things end up backfiring in really significant ways when you get those sorts of disconnects. And it does appear one way in which that's backfiring is Ukraine going and bombing Russian oil exports. I don't know what the other ones are, but I know that when there are these sorts of extreme disconnects, historically, you end up with, the Shah in Iran, you end up with the Iranian Revolution, where you had all these secret police and arresting people and all kinds of mess, that sort of thing, like really, really big, wide scale. China having issues with their sort of domestic Muslim population, where they, sent, watch this broadcast get disrupted for mentioning the Uyghurs, but send them millions of people to concentration camps and other stuff, and there end up being all kinds of knock-on effects from that, as well as from China input. So this is one of those things really big, and where it's worth noting, one, because we're people and it's terrible, but two, there are these potential economic implications from this disconnect of promise and reality, and of sending weapons and financing it, along with financing the other side through the continued purchase and waiving sanction enforcement.
Wow, fantastic points. Tracy and Josh, I want to ask both of you, but Tracy on this one. Do you think the over-weaponization of the U.S. dollar over these years, because Josh brought up a fantastic point, and I'm sorry, Josh, for being nice. I'm so sorry. But you brought up a fantastic point, and that was the weaponization of the U.S. dollar. Do you think, Tracy, the U.S. has done itself, the U.S. petrodollar and the U.S. dollar, a disservice by over-weaponization of sanctions? I think they have, but I would love your opinion on that.
Well, yeah, I mean, I think that we are starting to see some diversification away from the dollar because of that. I think that, the dollar is still going to, be around in our lifetimes. Yeah, but you are seeing other the advents of people trying to circumvent using the dollar because of sanctions, because, we seized $900 million from Russia, and et cetera, and so did the EU. But so yes, I definitely think that no other currency right now is viable to take over the dominance of the dollar right now, and probably not in my lifetime. But that said, we are seeing the rumblings of people trying to diversify away from it.
You bet. And Josh?
Yeah, so I followed Brent Johnson for a while. I think he has sort of an interesting framework he calls the dollar milkshake theory, which I'll simplify, and maybe I'm going to get it wrong, in which case maybe I just don't understand it, or maybe it's not what I agree with. But basically, when you get into crises, when you have too much dollar-denominated debt and too much dollar-denominated trade, given how much there is. When you have a crisis, you have people try to move away. All they end up doing is buying more dollars to net effectively go away. So you go buy gold, you're buying it denominated in US dollars. So you're moving away from the dollar, but at the same time, at least temporarily, you're propping up the dollar. I think the part of that that's sort of missed or not sort of well understood is after that, you've moved away from it. And so if you extinguish your dollar debts and you have done this shift that does maybe temporarily prop up the relative value of the dollar versus other currencies as described in this dollar milkshake. After that, you can end up with the dollar getting crushed to some extent and moved away from for at least some types of trade and so on. And so I think, and actually, if you look at stable coins and sort of the US government's sort of adoption of them and allowance of them and, the regulatory shield on companies that have had real audit issues and other stuff like Tether, I think you see sort of this move to defend the dollar and dollar denominated debt through these sort of alternative things that should actually be probably a threat to U.S. government sovereignty, but they're helpful to the dollar. So I think that is evidence of or an indication of some weakness in this dollar strength. And I think if we move too far, we could end up with sort of a big break in dollar dominance. But I think for now, we're still in this period where the dollar is pretty dominant. But like Tracy said, yeah, when we, and I think EU seized Russian assets after Russia invaded Ukraine, I think that really spooked a number of countries, and it did spark this move for central banks internationally to buy gold. It also slowed down the purchases internationally of U.S. Treasury bonds and other U.S. government debt. And so that's the start potentially of something bigger. But again, it could take many years, and you could actually see a lot of dollar strength on a relative basis versus dollar weakness. It is worth talking about, I think, here the currency sort of debasement trade. And people are saying, oh, hey, that's not really what's happening with gold or whatever. And I don't know. I mean, you look at my favorite part about the whole cryptocurrency thing. My least favorite part is there's no there. There's no intrinsic value in any of these cryptos. My favorite part is that everyone's learned that there is dollar depreciation over time. There's currency depreciation. When you print currencies, they do devalue, especially if you print them to meet government obligations, which is sort of the spiral down in, unfortunately, many societies, modern, ancient and modern. So that's become much, much better understood. And so is that happening more today than yesterday? Maybe not, right? We had a lot of that 5 years ago, maybe less of it today, but it's still happening. And so when you look at it, I think I heard Tracy talk about this a little bit, and maybe if not just now, then in a prior discussion, where you look at oil relative to some of these other commodities that have been bought because of this debasement, and oil and natural gas are very, very cheap versus other commodities and versus what we've seen with this debasement. And so, if you wanted to bet on debasement, let's say longer term, or a catch-up trade on the debasement we've already seen reflected in gold and various other currencies, oil and natural gas, and maybe also coal are really heavily discounted and have a lot of upside just based on what you've already seen happen on the gold side. And I'd love to get Tracy, what's your view on that and where oil and gas fit in versus gold?
Yeah, absolutely. I mean, we actually, if you look at the Bloomberg commodity chart, commodities are starting to break out. That said, it's all been led by precious metals and industrial metals. What has been lagging are grains and obviously the energy sector, oil, gas, coal. So what I'm looking forward to in 2026, I think that we're going to see some fundamental issues with like corn and wheat crops. Next year, they aren't supposed to be as robust as they have been, or that's what they're saying for right now. And so I wouldn't be surprised if we see a switch into, and I've been calling for 2026. I think, I've been saying all year, it's not the year for, oil and gas necessarily, but I think, looking into H2 of 2026, it certainly will come to fruition because I think that it's been ignored in this whole AI picture for far too long. And then, of course, like everything else, you go, oh crap, we're late. We need energy. What do we do? Right. And so,
Yeah.
oh yeah, we should have thought of this 5 years ago, right? But so I think that's going to be a central theme for 2026, and I think grains possibly too. And so we kind of see a shift to some of those commodities that didn't get as much love this year.
Tracy,
Stu,
let me ask. Yeah, go ahead. Sorry, go ahead.
Can I ask a follow-on question to that? So we're starting to see this like sneaky good performance of energy stocks versus very weak oil prices. And so is that sort of is one way to interpret that? You have this extreme negative sentiment, you have weakness in the spot price in the commodity, you have all these news stories that are real negative, and then you see the stocks go up, and the stock trader's perspective and the investor's perspective is, hey, the equity market looks through the short-term weakness and sees what you're describing. Is that some of what you're talking about here?
Absolutely. That's part of what my theory is. Part of, what I am seeing is absolutely, we are seeing strength in energy stocks with energy prices low. And that generally doesn't happen. Generally, sentiment follows oil price all around, right? And so at least some people are thinking we need energy as an investment. And these stocks have been beaten up. They're cheap. Let's get prepared for this.
I'll tell you that is a fabulous point. When you sit back and take a look, we've already talked about what we thought natural gas would be sometime in next year. I just wrote an article. It's location as far as oil and gas break-even points. Exxon put out that their Guyana assets are $30 a barrel break-even. And when you sit back and take a look at the Dallas Fed, Tracy and Josh put out that great article where you have the different basins, and the break-even point is by basin is really around $50 to $60 break-even sometimes, depending on the basin. And Alaska, it ain't $60 oil is not break-even, because you got to get all the infrastructure built up there. Where do you think oil prices, Tracy, is a follow-up question that you just talked about? Where are you guessing for 2026?
I do not like to guess where oil prices are going, because somebody's going to hold me to that. But Josh does, so I'll let Josh take this.
So that was funny.
Yeah, no, that's great. Yeah, no, I have the 250 WTI hat, which is up on that merch store too. I got like 1,000 requests on Twitter for when my friends came up with these in like 2022 when oil prices were skyrocketing. And so I like them a lot more when oil prices are low. When oil prices have doubled in the last year, it's like a little uncomfortable to have a hat like that. But man, when prices are below 60 or right around 60 WTI after gold's gone to 4,000, and you have this sort of really big sentiment disconnect and sort of price disconnect versus other stuff, I love these hats. So one, some of those cost numbers are totally bogus. There is no way, maybe like the quarter cycle, just like the operating cost break even for Exxon and Guyana might be $30 a barrel, maybe. And that's if they get some extra discounts on their FPSOs and whatever. But there's just no way that that's $30 a barrel oil. Frankly, there may not be almost any $30 a barrel oil left in the world. You look at Aramco and their break even, and their dividend break even in like the 70s or 80s, and then sort of their full break even for the Saudis in the 90s plus. It's real hard. There might be some Canadian multilateral heavy oil, and there's not a lot of it, but some of it that might be break even at, let's say, $30 WTI, and maybe one or two other spots. But there's no way, if you look across the Starbucks block, you look at how much money Exxon has into that, the quarter cycle cost might be 30. But so the reason to talk about that is, hey, everyone thinks something is cheap and it's expensive, and then the investment in that thing goes down and not up, it does set up for a super spike. And so that you could end up in this all-time high price environment. The one other thing to touch on here is that since you asked on my price forecast, I think that when you have governments try to suppress prices, you end up with an unpredictable time frame. So this is definitely not for 26. I don't know when it happens, but I just have increasing confidence that it will happen. The more the Trump administration, the more various other governments try to suppress the price of oil, the more likely it is that the price suppression backfires and you end up with radically higher prices. And so 250 would be a inflation adjusted all-time high price for oil. And so I don't know if it gets to 250 exactly, maybe it goes to whatever, one something or three something. I don't know exactly where, but both because of the underinvestment and because of the price suppression, I think you're set up for a radical move higher in prices. I just don't know, does it happen now? Does it happen next year, 3 years? I don't know, but I think the setup is there for a tremendous bull market in oil. What do you guys think?
Josh, this is Gavin Newsom. He just called to complain about you. You just described. Oh, hang on. Anyway, you just described California. So holy smokes, he got all upset. He just got off the airplane from Brazil talking about that. So great points. Anyway, I think here's a great question from Rodney, and I want to throw this at you here. Great questions for your. Is there a way to bypass the rhetoric from the climate cult to reach the people with pragmatics and inexpensive, reliable energy? We're fighting a propaganda war, and from my point of view, logic is on our side, corruption is against us. This follows right along, Josh, with what you just said. And Tracy, what do you think about that?
Well, yeah, I mean, I think we're already starting to see this narrative change. We've started to see it over the year where we see the breakup of the ESG Bank Alliance and the Insurance Alliance, and that narrative is kind of slipping away. And, suddenly AI, we need to build AI. The whole world needs to build AI. Forget the ESG at this point. I mean, that narrative is like, I think that just pushed everybody a little bit closer over the edge. There are people that are very upset about that. But I guess we found our narrative to kind of get over that a little bit. And there is nothing wrong with renewables. They have their place. That is fine. Solar is great. Wind, I'm not such a fan of. But we need reliable baseload power. So you're going to still need fossil fuels. You're going to need nuclear. You're going to need it all. Like, right. Demand is not going away. Energy demand is not going away. The only source of energy that we have ever gotten rid of entirely is whale oil. And we're still using all the sources of energy that we ever have before. We just keep adding new ones on top of it.
So oil saved the whales the first time. Do you think that oil will save them again when we get rid of offshore wind?
So perhaps that's a roundabout way of thinking about it, but who knows?
I have a bottle of whale oil up there. It's not active. It's labeled whale oil. I was a Christmas present from Cuppy a few years ago, and referencing that, it is, like Tracy said, the only energy source that's actually gone away. And if you love whales and you love the environment, you should also love the crude oil industry, because laws did help reduce the hunting of whales for oil, but the biggest thing by far was not that. It was the replacement of whale oil with crude oil. So it's a great point. And I have this Fossil Future book up behind me too, from Alex Epstein, which I think he makes a really, really good set of points in there to address that. I guess one thing I'd point out, I think there's a risk around this sort of narrative on this, which is that it's sort of similar to government policy failure generally, where you'll have these terrible economic policies implemented, and they predictably fail, and then people say, "Oh, well, that's capitalism failing," but the policies aren't capitalistic at all. They're not free market. They're government intervention. They're whatever, and you name it across, whether it's rent control or whether it's trying to suppress the price of oil, or whether it's the Inflation Reduction Act, which sent power prices way higher by forcing coal power out and forcing wind and solar at a high percent of the grid where you end up with blackouts and really high prices. And then people will say, oh, well, that's whatever, right? So one of the things that got me to get more vocal, Tracy's been doing this a lot longer than me, but one of the things that got me to be more active on social media and just start speaking out was the complete nonsense that people were saying around the winter storm here in Texas in early 21, where there were blackouts and they blamed it on natural gas when ERCOT cut the power to the midstream and to the gas plants. And so, of course, there was no natural gas because they sabotaged it. And then they said, oh, this means you need more solar and wind. It was like, no, you guys destroyed it. We need less government involvement in this, and we need ERCOT to be not depoliticized and to, have consequences for intentionally blacking out everyone to whatever. So anyway, I think the real problem, I think, on the narrative on this is that you have policy failures and they just get blamed on whatever the media and whatever sort of the popular or whatever folks don't like. And so you can end up with a real disconnect from reality, which I think we saw for a long time. Fortunately, we're moving, it seems, in the right direction, but I'd just be real cautious with this because I think it's real easy for that sort of thing to backfire and to end up in a much worse place. And that's part of why I don't like these announced sanctions as well as government price suppression of oil by Trump, because I think some of the deregulation is really positive from a pure economic perspective. Cutting taxes, cutting regulations is a proven recipe for economic growth and for broad prosperity for many years in the future. But when you pair that with price controls and with promises about changes that then aren't enforced, you end up just increasing the odds of failure and then a backlash. But the backlash is going to potentially punish and reverse the deregulation and the tax cuts rather than reversing the failed price suppression and the insufficient enforcement of sanctions. So that's my problem with it and why I've been so vocal on it. Tracy, what do you think about all that?
So no, absolutely. I think anything, the pendulum always swings right to the other direction if you're pushed too far in one direction. So, I think we really need to find some middle ground. And I'm hopeful that can happen at least right this second.
I want to give Joanna Freebie a shout out. She is facing a bunch of things in the Texas area as well, and she's been very strong and vocal on this. We need more energy management to make sure the electricity stays on where it is needed. She's bringing up a fantastic point, and I think that it's not only just the she's in really articulating very well on her Substack, and I'll have that in the show notes when I get this published out on my Substack tomorrow. But Joanna is very spot on. I think we're going to go to a decentralized management, and we're seeing that by all the AI going behind the meter. So you're seeing that behind the meter, meaning it's not going to go on there, is going to be a huge change in how utilities make money. I mean, I don't even know how to begin to start on that one.
So I sort of agree, but I would take the sort of inverse of it. I think the problem is that we have too much government involvement and we have these local area monopolies that have no consequences for failing on service. And when they fail, they are rewarded with higher rates and higher profits and bigger exec comp and so on. So I complained a lot about Centerpoint around the power outage here in Houston a year and a half ago around, I think it was Hurricane Beryl, but it wasn't about them specifically. It's looked like there's clear regulatory capture by, it's similar in insurance, these government utilities, there's various groups that basically have government enforced monopolies or oligopolies, and then when they fail, which they predictably fail because the structure of that is such that there aren't the incentives for success, you end up with more pushes for more government involvement when the problem was caused, in my view, and in most cases, by that government involvement. So I think the problem is when you have no choices about who your utility provider is, and there's no consequences for this government awarded monopoly for blackouts across Houston for whatever, and where they took the money that was supposed to be used for these gas power gen and for the whatever, and they paid it out in dividends and exec comp. And so that's not capitalism, that's socialism. And it's like crony capitalism or fascism or whatever it is. It's not free market capitalism. And so more of that, in my opinion, is terrible. And the problem is you give that power to the government and to bureaucrats, and they get bribed and they get, election donations and whatever. Like Centerpoint's a huge donor. Like we're forced to pay here in Houston these rates, and then they take our money and donate it to be able to then take our money and pay it to themselves and pay it in dividends. It's a very weird, corrupt system. It's more Soviet, I would argue, than it is free market. So I don't think the answer is more Sovietness. I think the answer is sort of more Milton Friedman deregulation.
Let me ask this question. Do you think that the midterms, I think the Democrats did a great job in seizing on finally waking up that actually people care about prices. Do you think the Democrats are going to try to blame the high electrical prices on the Republicans? This is for both of you on this one.
Well, of course. I mean, you're seeing this in California, right? I mean, forget that, like, California has literally chased everyone out of the state, practically, right? Everybody wants to leave. Chevron wants to leave. PSX wants to leave. Everybody wants to leave. They want out, and then they are, that's somehow the Republicans' problem, and gas prices are going to be too high because every refinery wants to leave California. And so, of course, and that is indicative of American politics. You're always going to have one side blaming the other side for what else. But yeah, absolutely, you're already seeing this in real time.
Rodney has a great comment here. Josh is correct. I'll elaborate. The establishment and all its tentacles desire to control us. This became clear to me during the pandemic and in my research in GHG research. Way to go, Rodney.
Yeah, I mean, that's like the sort of extreme. And again, I don't disagree with that, but I think this is a simpler way to look at it is you look at the profit motive and you look at the incentives. And the incentives for the utilities is to just sort of take more money and have no responsibility. And the more they can push that, of course they will, because they have a profit motive, and it's just not that's the way it's set up. And they're able to sort of further that through donations and lobbying and whatever, and through exec comp and whatever to reward their executives for doing that. It's not just Centerpoint, it's sort of the broader sort of utility industry of utilities like them. And then similar on the government side, if you're getting lots of donations and so on, whether you're a Democrat or Republican, this is a bipartisan problem. And like Tracy said, the pendulum swings back and forth, and you have, I don't know whether they just desperately want power in the short term or have short memories, but you see Republicans pushing to get rid of the filibuster when the filibuster helped Republicans over the last 8 years or last 12 years or whatever. So you just see these just nonsensically stupid short-term things on both sides of the U.S. political spectrum. And again, just real simple on the power prices. Power prices will probably go up. The utilities and the regulators will probably mismanage it. Both sides will blame each other. Both sides bear responsibility for it. This isn't meant at all as a partisan thing. And, whomever is in power is, I think, responsible to try to implement the best rules and best policies possible for their constituents. And, it's unfortunate that the Trump administration isn't doing that in the same way as the Biden administration didn't. And then, in specific states, I think you have real problems in terms of both Democrat-led states and Republican-led states in terms of those failures. And so you'll see people vote back and forth. But again, I don't know that changing the party that's ostensibly in charge really changes it that much, unfortunately. So I think the future is probably higher power prices for a while. And one really nice thing, which Stu, you referenced and Tracy has talked about too, is that as we move towards this big power gen development of more natural gas, of more coal, and in the future, hopefully, of safe, large-scale nuclear that's well engineered using well understood designs with hopefully triple checked construction quality, which I'm skeptical of, but hopefully they're able to do it right. As we ramp that, we should eventually get to another period of very low power prices here in the US. And even with all that drama, it's still way cheaper, even in California, than most places in the world for power. So even where we're failing, we're still better than most of the rest of the world on policy. So it's not too bad. And the other thing is, because of these problems, there is going to be this impetus for government intervention and subsidies to build out more and more power gen. And that will eventually be capital destructive. And what it's going to lead to, I think, is this shift in economics from the utilities and from the LNG exporters and even from the midstream guys over to the producers and services companies and to the ultimate benefit of consumers. So I see that sort of pricing power and profit power over, let's say, the medium to longer term shifting from the folks that have been sort of getting most of it to potentially a different part of that value chain getting more of it.
Well, Tracy, I just want to give you a shout out. I thoroughly enjoyed your interview with Charles Payne this week. I just want to show just a minute of it here and bring that up here, because that was really pretty cool. And that was a slide. Sorry, I had the wrong thing here. Let's bring this up here. And
financing needs, oh boy, the circular financing, $5 trillion, where do you get it? And then energy needs. I got to tell you something. When it comes to energy, you got to think about this. There's no better guest than Ninja Trader Group, their senior economist, Tracy Shuchart. Tracy, much has been made about this, obviously, the energy storage situation that's needed to achieve this AI center, at least the goals that we have in mind. And the great hope is that nuclear is going to play a massive role to help us get there. But, so much of it right now, I mean, just the uranium part of it, so much of it we bring in-house. We have to import. And I know there's been an uptick recently in domestic production. Are you? How confident are you we're going to have the uranium that we need to build out the nuclear power plants to power these data centers?
Well, I think, we need to approach this kind of in a different way. U.S. has indeed had explosive 1,200% growth, going from almost zero to in domestic mining. That said, these mines are only operating at about 28% of capacity because there's nowhere to process the ore domestically. So the biggest hurdle really isn't the amount of or the shortage of uranium in the ground. It's kind of a lack of domestic infrastructure to process it. But the good news is that the government has just allocated $2.7 billion to support this effort, and this is.
I'm going to have this in the Substack as well, because this was absolutely huge, Tracy. You did a great job there. So do you think the critical mineral mix for investors right now, do you think that we're going to be able to actually, I think we can get the critical minerals here, but it's the processing like you were talking about. How are we going to solve that?
Well, it's in general. We need a lot of, again, midstream for this sector, right? Because China really has the market cornered on not only, rare earths aren't rare. First of all, they are a lot of places, but it's really the processing of them and which they have cornered the market. And so, if we are going to address this issue and not have to be so dependent on China, not only the U.S. but everybody, then we need processing domestically or in domestic friendly nearshoring companies. Right. We're going to have to, that's where we're going to have to invest in. And I know a lot of people don't want it in their backyard because it's dirty, for a lack of a better word. But, again, I think there's a lot of investment opportunities there as well. We just need to look at the picture holistically rather than, one portion of the sector.
Right. Fantastic. And I really like, let's take a look here. Let's take a look. Joanna, again, has a great comment. At least emergency management should have the best interest of the people at front and center. They're the only ones to provide where and when the lights stay on when things like batteries are sited and evacuation routes. Again, Joanna's a great one to follow on LinkedIn as well. Josh, where do you see critical minerals as a commodities type investment? I mean, is it Do you look at the miners? Do you look at those kind of things? What are your thoughts there?
Yeah, I mean, my observation there, having seen this play out repeatedly, is that for the most part, these things are uninvestable for me because they are dependent entirely on government involvement. And so the higher prices are driven by China withholding these things right now,
Right.
due to certain specific trade policies the U.S. is doing that they don't like, and it seems sort of this like retaliatory buildup. What we've seen historically is that they'll wait until there's a lot of money in this stuff, and that projects are, let's say, a quarter of the way through, and then they'll just flood the market with this stuff again. And so even if the government provides the remaining capital that hasn't been raised yet, or whatever capital is pulled out, if the government backstops it, even then it's still hard to see these things being truly economic over the long run, given where they sit on the cost curve. So should they be built for national security reasons? Maybe. But as free market as I am, this sort of thing actually seems better done by the government than because of the interference by China and sort of their sort of national security oriented stuff. So these stocks, they're sort of uninvestable to me because, again, like you get either Trump changing his mind tomorrow or China changing their mind tomorrow or whatever, and they go away. They're sitting so high on the cost curve. They are necessary, but again, it's just like, how do you know when that's going to happen? And everyone forgets, like MP, whatever, like it was Molycorp and it had a big boom and then it went to zero. And everyone sort of forgets there was a Chamath like SPAC that got pumped and then crashed, and then I was getting pumped again. So I don't know. I don't own that. None of this is meant as financial recommendation, but to me, these sorts of things I'm almost more comfortable owning, let's say, an oil producer when the government is trying to put them out of business with the sort of Trump administration nonsense and the Biden administration nonsense and the Trump administration nonsense before, than I am in investing in something that's currently favored by the government, but that would collapse and go away if the government's support disappeared one day. So that's my framework on it.
You bet. Hey, Tracy, again, thank you for your great insights today. We're starting to wind down here in a bit. Tell us how people contact you and what you do for.
So yeah, I'm getting kicked out of the studio right now. So I will have to leave, but I am on Twitter at Shy Girl, CHIGRL. I'm on Ninja Trader Live in our YouTube channel every morning at 8 a.m. To 8:45 a.m. and then again on at 2 again at 2:30 p.m. So go to Ninja Trader YouTube channel, and I host a macro show there every morning at 8 a.m. So,
well, thank you so much again, and I look forward to more visits with you, and we'll be sharing all this out. Again, you hit it out of the park with Charles. You did so good there. Josh, as we wind down, where do people find you?
Sure. Yeah, the best way to find me is at bisoninsights.info. If you have to run, Tracy, yeah, thank you for joining. This was great. Thank you.
Great job, Tracy.
Thank you.
Yeah, what a pleasure. I really like Tracy. We got to know each other both through Twitter, and then got to meet in person over the years, and she's great. Really, really great insights. So yeah, we have this bisoninsights.info, launched a newsletter, I think almost 6 months ago now. We're getting close to that. 5 months ago. We've had really good uptake, shared some stock ideas. I get asked all the time for stock ideas, whether at, meetups with friends or cocktail parties or Twitter messages or posts or whatever. And I had a problem, which was one, I run an investment fund, which is separate from this newsletter. And it's a compliance problem for me to talk about positions ever, pretty much. And so the other problem was I would talk about them sometimes, and people would, like 3 years later, be like, oh yeah, I bought this stock and then it went down. It's like, okay, well, I posted 2 years ago that I sold it. So to address both the sort of reputation management aspect of it, as well as, actually, and again, none of this is meant as investment advice, but the very worst thing possible is to talk about something and then after I don't own it anymore, someone sees that I talked about it many years ago, buys it, and loses money. Like that part's, just terrible. So compliance, reputation management, and also like to the extent, again, that I can be educational and helpful in a timely manner, putting it all in one spot made sense. Charging a nominal amount of money for it made sense. And then the one other part that I haven't really talked about too much publicly, but I probably should, and I think we're going to put out something on this a little bit more over the holidays in terms of like explaining like what I'm doing with this thing. Because look, I run an investment fund with a ton of money in it. I've made a lot of money from that. I'm really lucky to have done that, and I stuck with it. It's like, I don't know if it's brilliance per se as much as just similar like the Forrest Gump sort of thing where, buying a shrimp and boat was a terrible idea, but surviving the storm was great. So, I'm really leaning to the bison thing, especially oil's up a lot today. Everything else is down. So sort of bison's almost the equivalent of that like Forrest Gump, like shrimp and boat thing. But when we launched Bison Interest, my investment firm many years ago, there were many firms that did oil and gas public equity investing. And now we're one of the last ones. So when there was this sell-off around Liberation Day in April of this year, so the investment firm, I generate income from it, and I also am the largest investor in the fund. I think I'm the largest or second largest at this point. And so I generate income in the form of a management fee off of that. And generally what I've done is accrue it and reinvest it. But sometimes I use it for, paying taxes because that's taxable and so on. And I was supposed to be taking some of that management fee and, paying taxes with it and, paying for my life. And you were having a third kid. So it was the prudent thing to do. And instead, oil stocks fell. And there was just this fantastic opportunity to deploy capital into the market. And so I told my clients at the time that I was putting more money in. I basically took my remaining liquidity and I invested it in oil and gas stocks. And so the thought was, hey, I'll do that and I'll go start generating income to sort of pay day-to-day expenses on or whatever via this other means where I have this big social media following. I have all these people bugging me for, hey, what stock should I buy? And it's like, well, I can't tell you that, but I can tell you what I'm buying. And so sort of charging a nominal amount to a very large number of people solved this problem of basically allowing me to go buy the dip with remaining liquidity. And I mean, it's been fantastic. I mean, these oil stocks are up a ton since then. Published something saying I was doing it, explained how I did it. And so this is basically my pizza money to be able to then put all of my net worth essentially into publicly traded oil and gas stocks in this investment firm that I manage, that I own, that I'm the largest investor in. So it's me essentially doubling down into that at a just phenomenal time. But again, you have to sort of balance these things. And so the ownership of these stocks is a long-term sort of thing versus being able to generate subscription income through a newsletter. So there is the business and sort of personal finance aspect. I think you and I have talked about this. I had an intern many years ago who's now famous for giving advice that would say the exact opposite of doing what I did. Morgan Housel, I think I have his book up here somewhere. So he would say, hey, you're supposed to pull money out of where you make your money day to day or whatever. And I ordered his advice and doubled down. So anyway, that was a long spiel on Bison Insights, but bisoninsights.info. I share about one stock idea a month. I interview executives and industry insiders and industry experts and various other folks that have unique perspectives on there.
And you got a merch store. I got to give you a shout out for the merch. I'm waiting for my mug, the Still an Old Oil Bowl. I cannot wait.
So this is for marketing for the newsletter. So it turns out there's wild price inflation. We shopped around a lot and we couldn't find a site that would be sort of both more reliable globally and cheaper than Printify. And there's like a few dollar margin on any of these items. And I'm donating 100% of my net profits on this to local charities. So the first one is, I think it's appropriate, it's the Houston Zoo, given the sort of bison theme. Next up, I think, I don't know, we might do some community organization or community center or something like that. But for now, the zoo seems to be a good spot to. So just to, like, it may sound weird, right? I've made all this money in investment management. I have this newsletter, and now I'm like selling whatever. And so it's just I got asked at least 100 times for these 250 WTI hats. So they exist. If you want one, go ahead and buy one, and I will donate my profits from this. I am donating them already to the Houston Zoo. So, and then to future nonprofits and charities and so on.
I love it. Well, and you can find me on theenergynewsbeat.substack.com. And I just released The Unpopular Truth About Energy and had a fantastic interview with Dr. Lars, who wrote the book on that. And he is a cool cat. And then also energynewsbeat.com, and come see me there. And we have got a lot of fun. Again, this was a lot of fun, Josh. I really appreciate you setting this up with Tracy. She hit it out of the park today, as well as with Charles Payne on Fox.
Yeah, big Tracy fan. And then just you're real humble, so I'll throw this in. So I have this man in a hard hat bobblehead, which is from Entercom. They used to do. They still host their conferences. They used to do every year a different bobblehead related to the oil and gas and energy industries. And Stu used to do a lot of stuff for them. And the thing you would do most that I would interact with him on was bringing executives, whether it was, senior executives of national oil companies or giant, international oil companies or tiny microcap companies, sort of the whole gamut, to come meet up with me, to get to learn about their stories and so on. So Stu is a seasoned industry executive with a lot of different perspectives. And so, I like the openness to silliness and to sort of all these different aspects of media, but also there's this real depth of experience and knowledge that I think is worth highlighting. And I also appreciate your humility in that you don't sort of lead with all of that. And so, it's great. I think you have a gamut of folks, some of whom I agree with or disagree with or whatever, on your different your different platforms and news sources and so on. But I think you come at it from just an enormous amount of perspective and experience. So, I appreciate you having me on this. I thought it was real great to get to have Tracy on here too. I can't say enough good things about you, and I appreciate you again for having me on.
Thank you. I can't wait to do it again. And we'll get some other folks. If you're interested in advertising on Energy Newsbeat, just go to energynewsbeat.co and take a look at some of the ads on there. Or if you want to buy the Bison Insight stuff so we can donate it, it's even better. But your Substack is worth the money. So I highly recommend people go to bisoninsights.info and go subscribe there and go to my Substack. So with that, I'm going to go ahead and close this out here. This went by in about 5 minutes, but we've been online for an hour, 27 minutes, and it felt like 5 minutes, which tells me it was a great discussion. Thank you for your time.
Yeah, super fun. Thanks. And thanks to anyone that's watching this.
All right. See you guys. Bye-bye.
You